Good morning, traders and investors. Happy Thursday to you. Thursday, January 15th, 2026. Triple D and I cooking up a good show for you. Chips to the rescue, and maybe specifically Taiwan Semiconductor. Strong earnings report, strong guidance, sympathy moves everywhere. We're going to talk about why Taiwan Semi might be so influential. Seems like every time Taiwan Semi reports, it just moves the entire chip space and all the little tangential players. Morgan Stanley, Goldman Sachs earnings also out. Not that exciting, but we're going to brush on those real quick. Morgan Stanley with a beat, Goldman Sachs with a mixed report. A couple of proclamations from the Trump administration yesterday on semiconductors, talking about tariffs on semiconductors, also on critical minerals, rare earths, and the like. We'll get you a little bit of an update on Greenland developments from yesterday. Pretty quiet there, thankfully. Couple of buybacks to note. Hilton and ADP with a couple big buybacks last night. Couple of mergers, few mergers overnight that we're going to get to. Handful of ratings. We're going to leave a good like 10 minutes toward the end of the show to get into a lot of these ratings that we got this morning. Data at 8:30 a.m., including initial jobless claims, import, export prices, Philly Fed, New York Empire Manufacturing Index. Our guest at 8:35 a.m., Greg Welden from Weldon Financial. Let's get it going here, folks, on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, let's do a little quick market rundown. Charts brought to you by TradeStation. Chart, analyze, customize, all in one platform. Thank you, TradeStation, for sponsoring these fancy, schnazzy charts. SPY here this morning, trading up 0.3%. Let's take a look at the Qs real quick. Qs trading up 0.8%. Small caps, IWM. IWM trading up 0.3% here this morning. Take a quick look at oil with the USO ETF. USO trading down about 1.5%. Crude oil trading down. I'm seeing it trading down 4% here this morning. Spot crude. Let's take a look at silver here real quick. Silver trading down 3%. A little bit of a pullback. Gold trading down 0.4%. And let's take a look at Bitcoin. I'll do the IBIT Bitcoin here this morning, trading down almost 1%. Let me pull my charts down here and let's get Triple D to the stage. Dennis, good morning.
Good morning. How are you?
Not too bad. Not too bad. Feeling good this morning. How you feeling?
Yeah, no, good. A little bit tired. It's one of those days. Snow day again here for the kids. No school.
Oh, yeah?
Just like I said, it always snows up here. Sometimes a little, sometimes a lot, but it's always snowing. It just never stops. So
Do
get a
the
little bit in the
kids?
winter doldrums here, but
I
we're
hear ya.
moving, we're going, we're ready to rock. And I would say Taiwan Semiconductor to the rescue here because, wow, blows it away. Give us those numbers here, Brent. Then we're going to talk
Okay.
about, it's moving the entire market here this morning.
All right, I'll pull up the chart in just a sec here. Want to give you the numbers first. Q4 earnings, $3.14. Nice beat versus a $2.79 estimate. Sales beating rather modestly, 33.7 billion. Analysts were around 33.3 billion. Guidance looked really strong though. Q1 sales expected 34.6 to 35.8. Gross margins 63 to 65%. Operating margins 54 to 56%. I'll pull up my chart here. We'll take a look at the Taiwan Semi chart. And Taiwan Semi is just like so influential. Whenever Taiwan Semi reports, the whole semi space, the whole like tangential, all the other suppliers just moves the whole space. Why do you think this is, Triple D?
It moves everything because Taiwan Semiconductor, everybody uses Taiwan Semiconductor. Like the customers, and you just talk about, what they're in everything. So Apple, they're in your iPhones, your iPads, your MacBooks. NVIDIA, they're in your AI accelerators, they're in your Blackwell, AMD, they're in their GPUs. Qualcomm, they're in their mobile platforms. Broadcom, they're in their networking and connectivity chips. Intel, ARM, Marvell. I mean, just everybody uses Taiwan Semiconductor. Obviously, we have a very much dependence on Taiwan Semiconductor, which is why, the Trump administration is trying to push Intel and trying to get them, obviously, building these foundries and trying to get chip production is not as easy as said, takes years and years. But the world is dependent, not just the US, the world is dependent on Taiwan Semiconductor. So it drives the bus for everything. I would say it's probably even more influential sometimes than the NVIDIA report. So you were up here this morning. We were up all night. Taiwan Semiconductor rescues us entirely here with their report this morning. And if you look, the major companies are up significantly on this. NVIDIA trading up off the Taiwan Semiconductor report, up 1.21%. AMD up 2%. Stocks like ASML up 6.5%. I mean, this is on Taiwan Semiconductor. So just so many sympathy moves. The entire tech sector is running today, and it's a chip run. They're running up on the chips, and this is the catalyst for at least this morning.
Got a few other peers to just at least mention: Lam Research, LRCX, Entegris, ENTG, CLAC, KLAC, Amcor, AMKR, MKS Instruments, MKSI. I have a list of like 10 other stocks here. At the end of my list is also SanDisk and Micron and Western Digital.
Oh, and those
Also,
should be at the top of the list too. I mean,
right.
they're right there too. And SanDisk is moving, and we've talked what's an incredible run. I did not realize this stat in SanDisk. In 2026, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days in 2026. I think if I did the math right, 9 days. SanDisk is up 60% in the 9 days. 6-0. That's absolutely unbelievable. After it had such a good run, so you're talking leaders to laggards, laggards to leaders. That did not happen for SanDisk. Micron, not quite as good, but been very strong in 2026 as well. But SanDisk is just unbelievable. It's like the whole world, forgot about SanDisk a year ago.
Yeah, seriously.
Now, the whole world remembers, oh my gosh, yeah, memory. They're a big part of that. This has been an unbelievable move and one of the more shocking moves because it just continues to go higher. And I mean, you could say, oh, well, valuations got to be getting stretched, but these things were so cheap because, obviously prices are so high. Again, cyclical businesses here. But this has been an unbelievable move for SanDisk.
I mean, look at the chart here.
It looks just, like it's not even real. And I mean, you go out to the monthlies. Well, on this, I think I had a reorg, or a change of symbol, so I don't have long-term data. I don't know if you do either. No,
not really. No,
But this has just been unbelievable, an unbelievable move. I don't know where the party ends. I thought, back at 300, it was, getting a little bit stretched. I thought at 250, it was a little bit stretched. I mean, the stock is just continuing to go up. So we know these stocks can go a lot longer than you think. Does it mean eventually they fall over and collapse? Eventually there's some type of collapse, but it doesn't mean it can't, pick itself up and restart again too. I mean, just thinking back to November, the stock went from 270 to 180. That looked like party was over. Well, no,
exactly.
Party has re-begun. And you think about, like, we can talk about, all the geopolitical situation. We can talk about the value trade. We can talk about the drugs, having picked it up a little bit. But, really, AI is still going to be a story that is not going away, and it's driven by chips. So that's where, when you got the Taiwan Semiconductor, SanDisk, obviously memory. I mean, all of this just kind of makes sense that eventually these stocks start going again. And you wonder if today isn't a turning point where everybody's like, oh yeah, we still have AI. So for at least one morning, we can, sit the geopolitical situation aside. There was no, it doesn't look like Iran escalated last night. Greenland looks like it's on, standby. But at least for one day, we can focus on, AI. And it's nice to get back to like normalcy a little bit. And AI was the driver of 2025 and is the driver on January 15th.
Dennis, just jumping back to the memory here for a sec. I feel like you've been doing a fantastic job kind of just like warning people a little bit that remember memory is very, very much maybe the one that is most tied to a cycle, and that is the memory pricing cycle. And just to propose the question, just to give it to the audience out there, we had somebody smart in the pre-market prep or SCN chat, I can't remember, saying like, is there going to be a memory cycle moving forward? Like, is it just off to the races from here? And I feel like just asking the question is very revealing of like the environment that we're kind of caught up in.
Well, I think we just went through that. I mean, we just went through. Is there going to be a memory shortage? Is the question. Well, I think that's what's happening here too. Prices are getting
Yeah,
driven up because your main suppliers, Micron, SanDisk, Western Digi. I don't know if they can keep up with demand at this point in time.
it's
Like
wild.
that's where, like Western Digital. You think about where that stock was 3 years ago. It was not even 3 years ago. You know where Western Digital was at the beginning? I
Let's
never
look.
realized it wrote this much too. We've given so much love to Micron and SanDisk.
Yeah,
Western Digi needs some love too. Western Digital at the April lows hit $28. It's now
wow.
$223. It's up almost 1,000% this year. This is not some
We're not
small little
small
penny
cap
stock. This is
company.
not some speculative name. This
This
is
is
a
a
company that has
major company.
existed for like as long as I've been trading for.
Yeah,
These are incredible moves. And I mean, now if you're coming in, it does feel like you're way late to the party. It feels like it's midnight, and eventually, they're going to have, Cinderella and the whole, they're going to lose. And STX is another one. I mean, STX, same
sure.
story.
Yep.
$63, $312, now $320 this morning. But I mean, the party is fun while it's going on. So I guess, you keep staying in these things. They are cyclical though. So, I just want to keep warning about that. But
Yep.
holy crap, these moves are nothing short of astounding.
PEs around forward PEs for some of these names around 25, maybe up to 30 times. I don't know. Just to mention it here real quick.
Unbelievable moves.
Want to get to a couple other earnings reports here, Dennis? Morgan Stanley.
Yeah, we should jump in through them all. So the chips are going to be the driver of the day. That's the story. That's why we're up. We've been getting bank earnings, and they've been kind of, popping and dropping. We've seen this multiple times. Obviously, JP Morgan was the one that kicked it off. And we had, Citigroup yesterday. It was popped and it dropped, and Wells Fargo, and it popped and it dropped. I mean, we've been seeing this across the board here. Eventually, that trade gets old, though, and stale. So I think eventually you're going to get a sustained rally in one of these things. But Goldman Sachs, I want to start with Goldman first here, Brenster.
Sure.
Same theme. The pop and the drop. They bought this up to
Yeah.
943, and now the subsequent drop, and we're down at 913. So it's like 4 for 4 so far. The bank earnings are all decent, and they're dropping them.
Well, and also here's the thing to kind of remember on some of the big banks. There's so much like I don't understand the stuff, but there's so much nuance to these big bank numbers. There's so much that goes into the earnings. There's a lot that goes into the sales. The comparables aren't even that clean. Like we had Goldman Sachs reporting $14. Analysts were down under $12. So, some kind of adjustment there that Goldman probably had to do. The sales actually missed 13.45 billion. Analysts were up at 13.8 billion. Companies saying that global banking and markets revenue up 22% year over year. But, I think kind of the theme is, and maybe sort of unfortunately here to kick off the earnings season, big banks just aren't really impressing with their results.
This is always the way, though. So we could red flag it and say, oh, we don't like the trading action and the response to the banks. But this is not just this earnings season. This is always. I don't know why, but the banks are notorious for reporting decent numbers and popping and dropping. This is just what they do. And I think we just got to start accepting that that's what they do. There is obviously exceptions to the rule. Nothing works 100% of the time. Maybe Morgan Stanley is going to be the exception to the rule here this morning because it's holding them. Well, no, it's giving it back here too.
Giving back.
We're already starting to see the same thing happen here with Morgan Stanley. I brought it up and it was up $3, and now it's giving it back here as well. But this is just what the banks do. So I don't think it's like any indication that they've early economy. The earnings were good. The economy's flying. It's just for whatever reason, banks are just not rewarded on earnings. They never are.
Morgan Stanley Q4 earnings $2.68 per share, beats $2.40 estimate. Sales looking solid, also just under 17.9 billion. Analysts were looking for about 17.8 billion. I don't know, Triple D. Any thoughts on the Morgan Stanley chart here?
I think if you're coming in here and shorting these things at this point, like there is going to be one, and we see this always towards the end. Usually it is a Morgan that will dip and then it actually rallies. You get one that actually, okay, we're going to rally one of them here. And I've seen Morgan Stanley do that before. I mean, the earnings are fine. The earnings are fine for all these companies here. The reaction is usually negative, and that's where we are. So I don't think reading into the numbers and saying, oh yeah, they beat, it's got to go up. That's just never the case with the banks. So I think the bank earnings are what they are. We're getting into regional bank earnings season tomorrow. Regional banks, remember, were the R in my Burr trade.
Yeah.
I had Baidu, I had Roblox, which has come back nicely. I also had, what's that third R? I'm already forgetting. I had so many R's that I wanted to go. I ended up going with Roblox. Isn't that funny? Because I had like Rich Tech Robotics I was talking. I was having a bunch of other ones, but I didn't put that. I went
We
with
need
the
Joel.
Staples.
We need Joel.
Yeah, we
You
need
know what?
Joel. Somebody
I
in the
had,
chat will tell me what it was.
you know
I
what?
probably own this. It's Rocket. How did I forget Rocket?
RKT. Poor
I'm up huge in
RKT.
Rocket. It's been great. Rocket has been a really good one. And then regional banks, which would be the KRE, but I know the R doesn't make sense, but it's called regional banks. Well, let's see what happens tomorrow. We get PNC, STT, RF, MTB. We actually did get, I think we did get FHN this morning. We don't have to cover it.
Yeah.
BlackRock, we also had a report this morning as well. And BlackRock is lifting here, which obviously an asset manager here. So we've had some earnings here. Do you want to cover BlackRock, or do you want to quickly go on to the next? I don't know if you have the earnings in front of you.
Let's do BlackRock super quick. I pull up the chart here. Is it going on stage? Oh my gosh, I gotta add my thing. 1 sec. Sorry.
Yeah, no problem. I can give you the BlackRock earnings if you want while you're getting that up.
Sure.
So
Yep.
BLK does beat by 72 cents. We'll just tell you what they beat by. We can give the numbers, but you can read the numbers yourself. Bottom line, they beat by revenue and they beat on the earnings per share by 72 cents. So it's a nice beat. Assets at $14 trillion. Stock trading up $24 in the pre-market. It's been sleepy. It's been looking for a catalyst. Maybe this is the catalyst to get it going. I mean, your asset managers haven't, really been flying by any means, but, BlackRock's the best one. If you want best of breed, it's always been the best. And it's kind of been sleepy here for a while. So we'll see if this can get a kick started or if it's going to be one of those rips and dips.
Okay, so wanna address a couple proclamations from yesterday. This isn't like these aren't the most exciting news items here, but I think we should mention them. And also, I think there's kind of a cool little piece of education that we can do here. So midday yesterday, the White House issuing a proclamation adjusting imports of semiconductors and semiconductor manufacturing equipment. Also, a proclamation adjusting. See if you guys can see that. Imports of processed critical minerals and their derivative products into the United States. Obviously, implications on the semiconductor one for NVIDIA and AMD. Implications this week for the critical minerals plays. We've seen the rare earth stocks going nuts. So for this critical minerals things, what happened here, folks, is the Commerce Secretary did a 9-month review of how chips, at least chips and critical minerals, are affecting U.S. national security, according to the Secretary of Commerce. These reports concluded, and here's the proclamations showing the results for that test. So a couple people in the SCN chat had trades on ahead of this critical minerals thing. We knew that the G7 leaders, a few G7 leaders, were going to be meeting in DC to talk about too much reliance on Chinese critical minerals, how we can diversify, nations can diversify in their influence for critical minerals. Now that we have this catalyst past us, remember that if you are a catalyst trader, if you're an anticipatory trader like Dennis is a lot of times, there are times when the catalyst ends. And Dennis, what happens when your catalyst is ended?
Well, usually you get a catalyst hangover, and that's what we've been talking about. And I put a little short out there. It was a nice job by Michael there to get that and edit it out. But I mean, catalyst trading is very simplistic. You get long ahead of the catalyst. Usually don't take it into the actual event because that's always, a coin flip. And then, you get the catalyst hangover after sometimes. So we were trading. We were talking about, obviously, some of our rare earth stocks getting a lift here, on this, and they did. I mean, look at MP Materials, bring it up. I'm long MP Materials still in the long-term account, but we were trading it from the long side as well. So MP, has been, a pretty big move here too. CRML, which is critical metals right in the name, had a huge move yesterday. Leaking back a little bit here this morning. You can go into USAR, which is USA Rare Earth. There's TMC if you want to do some smaller ones here. These stocks are starting to show some life, though, so I don't necessarily think they're going to go back down. But we do know the classic catalyst trade is being long ahead of the catalyst and not long after the catalyst. Like JP Morgan Healthcare Conference ends today. So does that mean, you get the catalyst hangover? XBI had a nice pop yesterday on it. Does it get the catalyst hangover today? It's possible. So we know CES too. We had AMD, NVIDIA had a hangover for about a week after it ended, but now they're obviously Taiwan Semiconductor just ignited both those stocks. So, that's what catalyst trading is, being long ahead of it and not necessarily, more not being long after.
And with these catalysts, with some of this anticipation, you don't always have to like trade it. But what we want to try to avoid here on PreMarket Prep and Stock Trader Network is people getting caught off guard. They're like, oh my gosh, what's happening in my biotech company? If you were just aware that there was a major presentation, a major conference happening this week, at least if you see price action, you're not totally caught off guard. Dennis, I wanted to ask you real quick. There was a presentation today at the JP Morgan conference. I just wanted to mention it real quick. Do you remember what we were standing by for today presentation? I forget it.
What is that? I think Clover is still today.
Clover, thank you.
VCYT. Yeah, but it's kind of had its catalyst yesterday morning. So I did lighten that up because, you had the announcement. Do you get another announcement? When you get a company issuing a press release the day before they're supposed to present, it's probably most of the stuff is in there. So
Yes.
do I expect them to announce more stuff here today? Maybe, but I mean, that gave us the pop. It's a nice pop when you get a 30-cent move on a $2 stock, catalyst trading in itself. I mean, and then VCYT, I haven't heard anything from them yet, but they're due to present here later today. So it's a thin one, though. That one's I've tried to trade a couple times, and it's just too bloody thin.
Gotcha. Okay, awesome. A couple buybacks last night, Dennis, that we noticed. We noticed a Hilton buyback. I think they raised their buyback by like $2 or $3 billion. Actually, they raised it by $3.5 billion and now closer to $5 billion. And then also ADP Automatic Data Processing, one of your payroll companies, announcing a $6 billion buyback plan. And somebody in the audience may be going, Brentster, why are we talking about buybacks here? Who the heck cares about buybacks? Well,
it's a driver of price, and it's like vote of confidence for the companies that the companies are saying our stock is too cheap. Sometimes you get into a situation where they buy high and they don't do it well. Other times, companies can be in the gutter and they need a vote of confidence here. So they're not a huge driver of price, though. Like I've always said, buybacks work over time, but they'll get an initial pop off of it. But it's not like boom, all of a sudden, they're doing a 6% buyback of the float. The stock just doesn't go up 6%. And that's what we just calculated the ADP one to be. So, over time they go up because these buybacks are done over time. And if you think about Apple's entire story, the entire run, really for the last 10 years, has been driven by buybacks, lowering the shares outstanding and bringing up the EPS. Because there's two ways to bring up your EPS. One is to bring up the earnings. Two is to reduce the amount of shares outstanding, and then the EPS goes higher. Apple has done that tremendously here. Apple has not had top line growth in a very long time. It's just a staple iPhone company with a call option on AI. But, really, this has been a buyback story. So over time, when you do these major buybacks and you're a cash cow like Apple is, it can be the driver of price. And that's really what's happened. Also, multiple expansion has happened in Apple as well, which, I don't totally agree. I think it's overshot here at this point in time, but I thought it was overshot at 200 and it's 260. So I've been, early to say that's been overshot. Hilton, to comment on that, the stock's at all-time highs. I never like them when they're initiating buybacks or adding to them at all-time highs because it seems like, we just ran from 150 to 300. It's a huge move for a hotel stock. And now you're buying stock back. A little bit late to the party.
And sorry, just to provide the contrast here, look at the ADP chart.
Yeah, so this is one where it's in the gutter and they're saying our stock is too cheap and let's, come in here and buy, on the dip. I like that better. You know what? Same thing. Buy dips, sell rips. Hilton's buying rip. So ADP's buying the dip. I like the ADP buyback better.
The sentiment, the psychology of it. We focus on some of the insider trading, some of the insider purchases when they're happening in wherever the price is, because it can be a vote of confidence. You said that magical phrase, Triple D.
Yeah, and that's what stocks need sometimes, especially when they're in the doldrums and they've been not doing stuff. Sometimes they need a buyback to kickstart them. Sometimes it doesn't do it. Sometimes it's just an initial pop and then they don't care anyways and the selling continues. So do we have time to do a little bit of M&A action?
I think we do. Just a little heads up, 8:30 a.m. We're going to begin initial jobs claims, import, export prices, Philly Fed manufacturing index, and also the New York State Empire manufacturing index. 4 data points. Do I think that those 4 data points are going to move the market? Probably not, but we are going to break in and cover them. Let's do a little M&A, Triple D. We have 2 confirmed deals here this morning. We have Boston Scientific buying Penumbra, ticker PEN. We have Mission Products, AVO, buying Calivo Growers, CVGW. Also, there is a rumor, a little contrast here to those 2 confirmed deals. We have a rumor that Sanofi could be preparing a revised bid for Ocular Therapeutics, ticker OCUL. That is your big winner here this morning, OCUL. Triple D, how do you propose to trade M&A? And we have again 2 confirmed deals. We know this is happening. We know the price, and a rumor where we don't know the price. We don't know if there's going to be some kind of hurdle to getting this done. You would certainly trade those 2 types of M&A deals differently, right?
Yeah, I mean, obviously you got rumors, and those can materialize into something, those may not, and then you obviously analyze deals from a risk perspective. Is there any trust risk? Could that bring the stock down? What's the discount to the deal? What are they pricing in? Those are all the factors. It's called risk arbitrage. When you're doing M&A, it's risk arbitrage. That's the official name of it. I did risk arbitrage back in the early 2000s a lot. High frequency
Okay.
traders have kind of pushed us out of that space because they kind of have perfected it. So
Yeah.
don't expect to, on a deal announcement where you can bang, I'm going to be really good the fastest on this deal and scoop all this up. It's not that easy, but there's overshoots as well. I mean, even last night talking about the CVGW, I was trying to short it because the deal was 27, but it was also AVO was, it's cash and stock, and
Cash
AVO was
stock.
trading down. You knew it wasn't going to go all the way to 27. I tried to short 26 and a half on the reopening of it. It didn't quite get there. It went 26.35. And then obviously we were talking about it, and I was like, well, I like it more as a short here, 26.35 than a long. And it has leaked back. And it's not like you're going to give it all back or anything like that. It's just repricing for the deal. Like, one, we have time value of money you have to always consider. And then 2, there's risk that the deals don't go through. And when you have a deal that's cash and stock, you have to look at the acquirer. And if the acquirer starts dipping, that's going to bring down the price of the stock getting acquired. So on pure cash deals, you're just looking at time value of money and risk. So two types of deals. One's stock, one's cash. If one's pure cash, you're just looking at time value of money and the risk that the deal doesn't get done. That's what the risk arbs will discount. If there's, a stock deal, all stock deal, then you're looking at the price of the acquirer and doing the ratio and then figuring out the discount from that ratio. Time value of money and the deal risk the deal doesn't get done are still factors in there. But there's the third factor is where is the acquirer price moving, because that moves. In the case of AVO, it's moving down. So that's going to bring CVGW down a little bit with it as well. So you have to, that's all the considerations you have to do when you're talking about risk arbitrage.
Woo! Mic drop, Triple D out. That was great.
Triple D out. That's a quick look.
Just end on a high note.
We do have Hive. Let's quickly, just get
Cool.
Hive in here because we have 8:30 jobs obviously are coming here at data with us as well.
Want to say thanks to Hive Digital Technologies, our wonderful sponsor for a good chunk of 2025 and continuing on into 2026. We would gladly love having Hive around as a sponsor moving forward into this year. The global leader in green power data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly half a gigawatt of renewable energy, Hive was on track to capture 3% of the world's Bitcoin production by the end of 2025. Visit hivedigitaltechnologies.com to get more info on Hive. You can also scan the QR code in the bottom right corner on screen right now. We got about 45 seconds here till data. There's also a link in the description of this YouTube video. Thanks again to Hive Digital Technologies for sponsoring pre-market prep.
Yeah. What's the data we're getting here one more time,
We are
Brentster?
getting jobless claims. We're getting weekly jobless claims. We're getting import export prices. So a little look at inflation. We are also getting a couple manufacturing index, New York State and Philly Fed manufacturing index. Jobless claims, probably the only one that we sort of care
I would
about.
expect almost no movement off of this. So don't expect
Yep.
big moves. These are light numbers that in normal times don't matter at all. We're a little bit sensitive to economic data because of the interest rate situation and not knowing where they're going, completely the picture
Sure.
of 2026. But I would expect not much movement here at all. So let's see what happens here.
We got New York State Manufacturing Index 7.7. That's a really strong reading. We have Philly Fed Index also really strong, 12.6 reading. Standing by for the jobless claims number here. It looks like it might be a little bit delayed. Philly Fed Manufacturing with a couple of negative components to that data point, but overall the data looks solid here on the manufacturing side of things. I still do not have the jobless claims figure. You see jobless claims, Triple D?
No, I do not. Waiting
Market,
on that one.
market, pretty quiet here. U.S. import prices month over month up 0.4%. The forecast was for a 0.2% decrease. So that is a hot number on the import side of things. Export prices also hot, up 0.5%. That's 0.5. Economists were looking for an unchanged reading. So that is also a hot reading. Let me check back on my jobless claims data here. Still waiting on the jobless claims data.
Delayed. I think it's delayed because CNBC just says delayed here too
Oh,
on the screen. So we're waiting for it too. We're all waiting on that number. Not moving too much here though. While we're waiting here, and Greg's going to be in the background, he's getting ready. So we'll get to Greg in just 2 minutes here. We did get a question here and a tip. Initial jobs claims out now 198,000 versus 215. So it is light. Initial jobless claims
light
is
jobless
light.
claim.
198 versus 215. Question is, what would be the effect on Tesla? Thank you for the tip, by the way. What would be the effect on Tesla if SpaceX IPO doesn't happen, instead as goes into
Whoa.
holding with Tesla? So,
Interesting
okay.
question.
Yeah. So I just want to clarify the question here. So I don't know if I'm reading it exactly right. If the SpaceX IPO doesn't happen and instead goes into holding with Tesla, these are completely separate companies. So SpaceX is not going to be, part of Tesla unless there's like some Musk pulls something and he decides to merge the two companies or something. Tesla
Yeah.
stock would explode higher. But I mean, that's not going to happen. SpaceX is a company with a market cap as much or even potentially more than Tesla. So, you've got Tesla sitting around. Let's go look at the latest Tesla, market cap. I think it was around $1 trillion, was it not?
So
Go see what
Dennis,
Tesla is. So Tesla market cap 1.4 trillion now. It's that high. Wow. I didn't know it went that high. So Tesla is higher. SpaceX, they were estimating somewhere between 900 billion and $1 trillion for IPO. I think it will IPO this year. We don't have any, confirmation that it's coming, but it's supposed to be one of the big ones potential. I mean, the question is, and I've posed this before, is you have this Tesla cult that people love Tesla. They're all about Tesla. They're all about Elon Musk. The only way to get long Elon Musk publicly right now on the stock exchange is to own Tesla. When you get a second way to get Elon Musk via SpaceX, does that actually hurt Tesla stock? I think it could. I mean, Tesla looks tired to me. Tesla looks like a little bit head and shouldery. Tesla's valuation is nuts. We know that. But, we know they're going to be a big part of humanoids. And, you can't totally value this as a car company. You got to value this on the future. And that's what investors are doing. I still own a piece of Tesla in my long-term portfolio, but it's a small piece left. And at this point in time, I called for Tesla to get to 500. It missed it by a buck. It got to 498.83. That day we said, close enough. But, at this point in time, I don't know if I want to be buying the dip on Tesla. I think there's better places to be. Also, Musk's political situation is escalating, meaning I always said, you as a CEO, you want to stay market neutral. On this show, we try to stay, politically neutral. And on this show, we try to stay politically neutral as much as you can. I mean, there's always biases. You can't kill bias. But Elon Musk is not politically neutral. He's very much on one side. And that is coming out. And again, we're seeing people, get upset with his commentary here. Now, agree with him or disagree with him, that's not our job. But as a CEO of a company, you can't afford to cut off half your customer base. And he's starting to do it again here. This is what the stock got knocked down for a year ago, and it's starting to happen here again. So I'm very concerned about Elon Musk losing, potential Tesla customers by pissing them off by being so politically on one side. He doesn't care. He said before to David Faber, if I lose money because of what I say, so be it. But you as shareholders will lose money with him, and we have the choice. So, I mean, that's one major risk factor is we don't know what he's going to say next.
Absolutely. And sorry for not showing the chart there. It's because I had this thing from PreMarket up that I wanted to show you, and I didn't want to pull this down to put up my chart. So, I mean, PreMarket's really cool. Look at the stuff you can do on PreMarket. The SpaceX IPO closing market cap. This is a contract. Not that much volume here, under 1 million. Maybe there's a better contract, but
1 trillion
84%
plus
chance
is
over a
84%.
trillion. Yep. Wild,
Yeah.
right?
It is wild. It's wild that company's obviously worth that much money. But, you think about where he's come from. He's done some incredible things.
Absolutely.
Let's go get
All right,
Greg.
let's go get Greg. Greg Welden, Weldon online. How are you doing this morning, Greg?
Doing great. How about you guys?
We're hanging in there. Having a little morning.
What's your thoughts on Tesla? I mean, you were listening in the background here, and
Yeah. 424 gets taken out. It's a breakdown. It's really that simple to me. I mean, you have kind of what looks like a distribution pattern here. All the things you said definitely apply. So to me, it becomes a technical trade here. If you're long, below this 424 area is a major breakdown on a kind of a long-term basis. So
yeah.
I wouldn't want to hold it below that level. Let's put it that way.
What's on your radar, Greg? I mean, there's so many places we can go here. The macro geopolitical risk has escalated, this Iran situation, the Greenland situation, and then you've got, Taiwan Semiconductor reporting this morning and blowing away numbers and igniting the whole chip sector here again. Yeah. I mean, where do you want to go, and what's your overall take on this market? It's like,
I want to ask you a question. Say, buy the dip, sell the rip. Are we selling the rip in silver?
Holy. I would, but I would have sold the rip probably a long time ago. I did not
probably
see,
a lot of people
silver.
Too.
The last time it did this was like 15 years ago and had the crazy move from like 15 to 50. And, that was, then went to a 15-year bear market. The precious metals just don't do this normally. Like, silver doubling in a month and a half. Like, this is like,
that's because things have changed.
Take the money and run, but I don't know where the pony ride ends.
Yeah. Well, you take it back, and it's actually, you're talking about 1980s. I mean, you're talking about the Hunt brothers. You're talking about when I first came into the market, 1984, silver was trading $4. So the dynamic around the Hunt brothers is kind of around this, hashtag silver squeeze. And when you look at the dynamic around this is something I've had in my back pocket for 40 years, my entire career. We know that this is a market that is way behind every other market in terms of just simple price appreciation relative to inflation. So when you take that into account, they have successfully held this market down artificially, the bullion banks, the paper shorts, and all this kind of thing. And when all of a sudden you had a situation where, China holds a lot of silver, there's 60 to 70% of the silver market, held by China. And when you have now the Indian rupee, which has been down consistently, it makes a new all-time low pretty much every single month. And all of a sudden, gold became really expensive in rupee. What did the Indians do? Their appetite for metals is off the charts. They switched to silver, and they started buying silver en masse and huge quantities. And they want delivery because they want the physical metal on hand. So what you had in gold, with the last 18 months, was central banks buying gold, selling treasuries, taking the dollars, buying gold, and then taking delivery of the gold. They want the gold in-house. So that's what drove gold up first. It's not even a dollar down U.S. speculative move in gold at all. That now applies to silver. And what it does is it uncovers the fact that you don't have enough silver to meet demand. And if even the ETFs, if you took delivery on the silver, you would wipe out the COMEX, deliverable silver. So this is a situation where really is a squeeze where there isn't enough silver. And if you start to look at silver, and I think I was on maybe your show when I last talked about this.
Sure.
If you take out $36 in silver, it wasn't a question of how, whether you go to 50. It was how fast would you go to 50, and then how quickly would you go to $100. And you're pretty much there. So then the question becomes, what's a fair price for silver? Yeah. And you could use a lot of math here to give a silver price of around $325.
Holy, so you're staying long.
Why does that seem so outrageous? All right. Well, I remember when they took the dollar off the gold standard, and you remember gold was fixed at $35 an ounce, and it immediately went to $140. So I see like a very similar pattern in silver here. So when you tie the fundamentals, the technicals, kind of the dynamic, I think it's a lot higher. I don't think that happens right away. I mean, our original target was $100. You're pretty close. So that's why I asked the question: should we be, Should we be, selling the rip?
Well, so you've got in your back pocket. Are you holding for the 100, or are you going to keep going and holding it for longer?
I don't know. I'm going to let the technical action dictate that here, and which makes it really difficult because the short-term changes, the volatility here on the intraday basis is outrageous. And when you talk about someone like me that trades the futures market, and the contract values in gold and silver have multiplied exponentially to where the risk has multiplied exponentially. With a simple 2% move is worth twice as much in dollar terms as it used to be. So these are really treacherous markets. And if you go back, it's like you kind of want to take a victory lap at some point. Yeah, because what we really recommended on this show and a lot of other places where I did interviews was the silver mining shares all the way back to February last year. Valentine's Day special I put out there was called Silver Squeeze. Here it comes. I said, it's time. Bruce Buffer is talking about silver. It's time. And the degree to which the gold and silver mining shares have exploded, not only nominally, but relative to the S&P. You're breaking 30-year downtrend lines. So to me, this is still a very live story. And again, it hasn't even been driven by a dollar decline and a speculative fervor. You don't see open interest in gold or silver spiking. And I watched the dollar very closely here. It had a good chance of taking out 96.21 on the dollar index, which would violate an 11-year uptrend line that kind of confirms to the whole pattern going back to the 1970s. Again, where you look at the gold adjusted value of the dollar relative to where you were in 1976, if that's $1, you're at 2.3 cents worth the dollar's worth in terms of purchasing power. So if the nominal dollar were to break 96.21, I think that would be the next catalyst for another move from here in some of the metals. The question is, when do you get a correction? How deep is it? And then, you're looking to buy that dip for sure. But what I'm going to do here, it's literally day by day, hour by hour, almost minute by minute, because these markets are about as insane as anything I've seen in my 42 years.
General trading question here, Greg, because I've been trading professionally for 27 years and I still haven't figured it out. I'm very good on my entries. I'm very good at saying that this stock, looks like it's ready to go. My exits are always like I'm out too early almost all the time. Like I just underestimate how long things can go for. And like I would say, the silver, when it went from 40 to 60, I was like, well, that's a pretty good move. And now it's at 80, and you're like looking and saying, why did I sell? So two questions. One, how do you know when to exit a winning trade? And then two, how do you not sell too early?
You've hit this is the hardest single thing to do in what we do, is exit profitable trades. I've written about this at length. It's tough, man. It really is. And what I have found for me is using trailing stops has always kind of been the way I've done it. But now you give away too much on the trailing stops, man. The market's moves are so wide, your trailing stops don't have a chance to catch up to give you some degree of profitability that might be, relative to the entire move. So what you're asking is the toughest single question to answer relative to what we do. It really is. What I have found, and this is a tough answer to give because not everyone can feed into this answer. You could probably, but I would say that that's something I'm always examining because that is place where things leak. You need the big profits to take care of all the small losses throughout the year to get the big returns on an annual basis. You need those profits. So it's very difficult, especially when you have, real nice money in the trade and you want to take the money, but you're kind of cutting off your feet to spite your entire body when you're not letting the market run. So difficult. My answer is, the way I've done it here is, since I've been doing this so long, I feel like I have great instincts to see. I'm a pattern recognition guy, to see the dynamics around the patterns that exist before a big dump, before you have a big market move that then corrects really sharply. And so I've moved into shorter term technical signals on the exits and having more instinct around, do I feel this is a setup I've seen before where you get a pancake move on the flip side. So that's difficult for someone that's not done this for a long time to have those instincts. So it's a tough question. There's really not a good answer.
Let's move back to, obviously you've been all over the silver trade and, great call here, multiple times talking the metals here. What else do you like right now? Like, let's talk about what you like in this market. Like, where are you looking to maybe put some money into?
I think the overall broader market is kind of out of touch with the risk. you're looking at a minefield that we have to walk across in 2026, and it's just planted with mines all over the place. We could list the risk points, and I think everyone knows them.
Yeah.
I think to some degree the market's ignoring that, and I think that the market's hopes are predicated, number one, on the Fed. Let's talk about the Fed. The Fed funds futures point to a 3% Fed funds rate by the end of the year. If inflation's 2.7 CPI, I know they target PCE, but I look at CPI, then you're pretty much at 3%, you're neutral, all right? So if you want the stock market to keep going up basis some expectation on the Fed, you're going to need to see, the expected Fed funds rate to come even lower, because neutral isn't going to be good enough relative to where the consumer is. Everyone seems to be forgetting about the consumer. Look at the employment dynamic. If not for the big decline in the immigration dynamic, the people that have kind of self-deported, all of this, you would have a much higher unemployment rate, right? The growth in employment on a rolling 12-month basis is only 0.78 percent. So whenever you get below 1.5% growth in employment, you're kind of in the danger zone. When you get below 1, you're looking at a level we only see preceding recessions. That's number one. Number two, we just got retail sales out, and it looked okay, 3.3 year over year relative to 2.7 inflation, barely even 1% in real terms. All right. What was interesting about it though was the seasonal adjustment. All right. Last year's seasonal adjustment relative to this year's seasonal adjustment, they boosted the upside adjustment by $10 billion, which is the only reason this retail sales number was positive. Only reason. And then you talk about even inflation. All right. Well, inflation seems kind of, a little bit quiet here at 2.6 on core, 2.7 on all items. But you also have food at 3.1. You have energy, which has been negative, and it's been the reason you've had this disinflation, has popped back above 2. All right. The things that were down were stuff like furniture, used cars and trucks. What was up? Shelter, medical care, medical insurance. So you're talking about the things you need to buy are still very much in the inflation camp versus discretionary items where you've had some pullback. And something like furniture, it's a year-over-year mathematical base effect dynamic. There's really not deflation in some of these things that are having disinflation in the year-over-year numbers. Then you start to talk about credit. All right, consumer credit, revolving credit is negative. Last I saw, the last numbers came out, were $33 billion year-over-year in consumer credit, in revolving credit, excuse me. There's only 2 other times that's happened, 2009 and 2020. So what you're saying is kind of the dynamic around credit and a credit crunch is at play already with the consumer at a time when consumer credit held is the highest it's ever been. We know the interest rates are ridiculous. I mean, the banks are basically feeding off the consumer to make their profits. Look at Capital One. It's the best performing stock. It's the biggest one linked to credit cards. But the dynamic here is the delinquency rate is rising. The roll and the flow from 30 days to 60 days to 90 days delinquent is skyrocketing here. Auto delinquencies, auto loans, highest ever, higher than 2009. So these are all problems that, to me, have to be reconciled, all right, that are not. And you can run the stock market all you want on AI and chips and all these things. But without the consumer, 70% of the economy, services, 70% of the economy, without the consumer, you don't have the leadership you need to take this market up another 20%, when the downside is maybe 20 to 30%. That's not a ratio that I want to get involved with. The things I do like in the stock market, energy. All right. You just look at something like we talked about the last time I was on the show, lithium, uranium. I mean, these things are skyrocketing, man. Yeah. When you look at lithium, I mean, it's really come back hard. So these are the things I'm kind of focused on right now. The industrials, the materials, stuff like that, shying away from the high tech or anything related to the consumer.
What about the technology trade? We'll just finish with this because we obviously have Taiwan Semiconductor reporting this morning, new all-time highs. NVIDIA looking up here this morning because of Taiwan Semi, AMD blasting off. Does this trade continue? Is it too expensive? Quick thoughts on the technology trade before we let you go.
Again, I think the risk reward is just not there to be buying it here. I think that when you talk about AI, certainly a wave of future growth, but how much has been priced in? And when do you need to get AI to the point where you're actually, developing products that the consumer can buy? All right. Right now, it's kind of B2B, and it's not even, you're talking about data centers and all this build out, which require energy. So I'd rather be involved in the energy side of this than the AI side of this right now, because I think the risk reward in AI just isn't there from this level. I mean, certainly.
All right, Greg Welden, Weldon Financial. He's the publisher of the Global Macro Strategy Report. Appreciate you coming on, Greg. Hope you have a good rest of your week.
Yep. You too, guys. Take care.
Great
All right,
stuff.
thank you.
Thanks, Craig.
Later. Triple D, you want to get right into ratings?
Yeah, I think we should. I think ratings, let's do it.
Ratings segment here, of course, brought to you by The Fly. They have a new news platform that I've been playing around with. Triple D's been playing around. It's simple, it's easy, it's quick. We're going to be using it a lot more in the STN room for more than just ratings. But let's get into the ratings here, Triple D. You had a few highlights in tech and on the ratings front here this morning.
Yeah, let's start with the downgrade of that I highlighted. And there's a number of them this morning, but one main one I highlighted, and it came last night, KeyBank downgrading Rocket Lab to sector weight. I think this is more of a valuation call. If you want to bring it up and take a look at the color there, go ahead and give me some color.
Yeah.
But, it's a stock that's been on an incredible run. We highlighted this stock back when it was $40 in early December. It's now 91. So again, like me, I get out too early on everything. I actually didn't even take this trade, which I should have. Because I highlighted it and liked it and didn't take it, and I watched this continue to go. You could do the Kenny and say, 85 gets you 90, 90 gets you 95. We've kind of done that here, but it's been an incredible run. So I think KeyBank is simply looks like taking some profits, but give us some color.
Yeah, a little color. We're looking inside the Fly's Pro platform here, downgraded from overweight to sector weight. Companies' multi-year growth catalysts have become realized and are now generally well known. The analyst tells investors KeyBank continues to view Rocket Lab as one of the highest quality companies within the space sector, but thinks the stock's risk reward profile appears balanced in the near to medium.
It's gone too far. That's the bottom line.
Valuation
gone too far.
Yep.
Heck, I'm with you, so I'll give it, an A, because this is something that I would say too. Now, again, I always sell too early. Key is probably selling too early. You get to 91, you probably get to 102, but the stock's down a couple bucks because obviously KeyBank downgraded here this morning. Upgrades, Spencer.
Yeah.
There are so many upgrades here today. Many of them in the chip sector here. So we've talked about a few of these stocks here already. They were already going to trade up because of Taiwan Semiconductor, but Wells is upgrading AVGO, LRCX, KLAC, ADI, all those stocks trading up substantially here this morning simply because of the Taiwan Semiconductor report. Probably the first one we should look at, though, is Broadcom here, just quickly here. Give me the color here on the AVGO, and then we'll give you a few technicals.
This is a nice, clean comment here from the analyst. Gross margin concern is overdone. Wells Fargo sees Google's TPU upside plus significant added custom XPU ramps and the scale out and scale up networking momentum.
I mean, this stock has been one of the most incredible performers in the last 2 years, going from $57 to over $400. It has pulled back here recently. Is this dip just another buying opportunity? I'd say if it could get up above 360. So I'll say guilty until proven innocent here for AVGO. I think Wells Fargo is a little bit early on this. Sometimes early is good. But, you don't want to be too early and wrong. So I would like it back above the 360 level. That's where you got some major technical resistance. So I'm not going to get that interested until we see another 10 points on here and then holding for a day. It's not even good enough just for it to get above it. It needs like hold and consolidate and show me you want to go. That's it. So right now, the trend is not your friend. It's been broken. It's kind of just been sideways. But, we're obviously trading below some moving averages there too. So I would say the stock actually looks tired. So I'd be more of a fader of this Wells Fargo upgrade.
Dell?
Yeah. And I'm long Dell in my long-term portfolio. It was in my acronym last year with my fade trade. It was a great stock until November, and then she fell off a cliff. I mean, this is, the AI, some of this, overspend. Some of this is, just this sectors just hasn't been performing here of late. Do I think eventually it turns it around? I do. Dell's being upgraded here by Barclays, so they're trying to pick a bottom on this one. They are upgrading to from equal weight to overweight with a price target of $148. Do you have a little bit of color here, Brentster, from the Fly?
I do have a little bit of color. Thank you to the Fly. Firm is more positive on shares given the strength Dell is seeing in AI server orders. The company is expanding opportunities in enterprise server and storage while managing spend. Barclays believes Dell's management is well positioned to navigate the current commodity environment and sees more upside to estimates. Dell management is something that you've really chimed in on, Dennis, over the last. It's probably been a while, but I've been hearing you say it over the last few months.
Yeah. I think you're at a critical area because we got down here in November, this whole 116, 117, then we rallied to 140, and that's where we're trying to hold here once again. So I would just say from a technical perspective, it needs to hold this level below here. Then you start thinking about it as $100. But Dell is not an expensive stock. It's just, not loved right now, and these stocks go. Every stock goes from hated to love to hated to love. It's a cycle they go on. Right now, Dell's out of favor here. I do think it's best to breathe. PE is 15. Forward PE is 10. I mean, you're talking a very stock.
Actual value.
SMCI got the recent downgrade from Goldman, and going lower here once again. It's popping a little bit this morning here because AI trade is up. But if you're going best of breed, worst of breed, it's Dell you want to own here.
And Dennis pointed out the SMCI because that's the closest peer to Dell. When there's a Dell headline, Dennis is going SMCI right away, or when there's a SMCI headline, Dennis is going to Dell right away. That's the classic peer sympathy trader, relationship trader.
We also had Barclays upgrading Applied Materials. So
AMAT.
Just continuing with Barclays. Applied Materials is not up 20 points because of the upgrade. It is up 20 points because of Taiwan Semiconductor.
Yeah.
The upgrade just helps it here along. So you see the big move here up in AMAT here this morning. New all-time highs for AMAT as well. We've given a lot of love to Micron, a lot of love to Western Digi, a lot of love to SanDisk. We haven't given much love to Applied Materials, but it's been an unbelievable performer too. Since May, we're looking at a stock, actually since September, we're looking at a stock that has over doubled since September. So it's been on an incredible run here too. The question is, like Greg makes such a good point, have they gone too much, too fast? Is it too late to enter these stocks here? I don't know. I always think it's too late and then they just continue to go. So it's a hard trade to call tops.
Just a little bit of color here from Barclays. Barclays saying that the stock has underperformed due to valid concerns. However, believes the recent uptick in DRAM spend makes the stock worth owning. Memory exposure begins to favor Applied Materials this year, according to Barclays. You want to fit one more in here, Triple D?
Yeah, do Asana. And the reason I want to go to that one here, we're getting an upgrade. I believe it's from Citi.
Let me double check.
Yeah, Citi upgrades Asana to buy.
Okay.
Here's a stock that is definitely getting hit. We talked the SaaS trades yesterday. Obviously, this is part of that. We're talking about software as a service when we say SaaS. And these stocks have just been hammered. And Asana continues to get hammered too. I mean, Moskovich obviously came from Facebook and, continues to buy the stock like for the last 3 years. He just buys more and buys more and buys more. And I think it's up. I'm not sure where he is now, but I thought at one point in time when I looked, he's almost 30% of this company. Could Moskovich at a certain point in time say screw it and take the company private? I think it's possible. He really believes in his company because he continues to buy and the guy is super rich. But I mean, software as a service has just been in the gutter. So this is a completely contrarian call from Citi. Do you have some color on this one?
Yeah, sure. Let me pull it up. I was just looking to see if I could confirm there what you were saying. Yeah, give me just 1 sec. Pulling up the color here on the fly.
Price target up to $16 here. Yeah, you're trying to find how much Moskovich owns.
Exactly. Yeah. So Citigroup saying the firm believes the company's new management can drive spend efficiency. This can drive a potential sales re-acceleration and better margins. Citi believes Asana's AI studio could also ramp up its growth. I don't know.
I'm looking at Moskovich here right now. I'm just opening one of the filings here and trying to see for myself.
Yeah.
So he now owns 50, as of his most recent purchase. Well, I don't know if that was the most recent one, but he owned 56 million shares back in August. How many shares are outstanding? So let's go look at that too. It's a fun exercise. So we can just do, quick math here. You have to go look it up. We'll just do the math. 56 million, and he has outstanding here. Shares outstanding. No, it's not that quick to find this information.
I know, I'm trying to do too.
How many bloody shares are outstanding here?
Good luck.
I can see the market cap. Yeah, well, we could do the math here. So I got the market cap at 2.6 billion. So, and the stock is trading 11. So, that's telling me that, quick math here is, what is that? Like, it's big numbers here. 2.6 billion divided by 12. What's that math, Brentster? Do the math. 2.6
off the
billion
top of my
divided by
head. Yeah,
12.
I
Off the top of your head. But 250, Sicko 220 million shares. He owns 56. So he owns about 25% of the company, 28%.
That was good
Big
math,
chunk.
Dennis. I don't know if it was right.
I don't
but
know if I'm
you
right. That's
made
why
it
he's going to
look
say I'm
right.
wrong for sure. I just did that air math in my head. But it looks like 25% or so, 27% of the company. So that is big vote of confidence. It continues to buy more. But I don't know what's going on with SaaS. I don't know what's going on with these stocks. They do pop. They get these pop backs here, but the last couple of days just falling apart again. We talked about Microsoft chart. It looks terrible. Looks like it's ready to fall apart. It is bouncing with the tech rally here this morning, but just continues to get more sellers. And like Microsoft, not really fully a SaaS name, but is kind of. I mean, the Salesforce and then ServiceNow. I mean, they asked Kramer last night, and he's been a huge supporter of ServiceNow. And somebody came in and said, "Do you buy ServiceNow?" And he's like, "It's too hard to call a bottom on this thing."
Ooh,
I mean, this is $240 stock. Stock's been cut in half. I mean, if you think that AI is not going to displace all these SaaS companies here, they're probably all screaming buys. The valuations have come down so much, but what if it does displace a lot of what they're selling? What if you don't need as many software companies because of AI? That changes the whole landscape. So I think nobody has the answer to that question, but investors are selling first and asking questions later. Also, investors are going into companies that they know are the sure winners, like Taiwan Semiconductor, like Intel, or not Intel necessarily, but it's been going in there, but Nvidia. I mean, they're going into more sure bets as opposed to trying to guess that, well, AI may not disrupt this as much as the market's pricing it. Hard trade.
Triple D, let's wrap it up here for pre-market prep. Triple D and I are going to go over to the STN room at 10 a.m. in STM. Eric Kroll, he is an absolute IPO monster. We love getting perspective from Eric on the
about SpaceX.
Definitely. Also, at 1 p.m. today, the Trading Edge with Trader Prad. I'll be jumping on with Prad, hanging out with Prad. Prad's been giving us some really cool ideas in the SCN room. And then Triple D and I do a little closing bell show every single day, 3:30 to 5 p.m., 3:30 to 4. We get you ready for the close. After 4, Triple D is trading away, and I am breaking in with news. We're doing some quick real-time analysis on it. Really fun little hangout, little good info session that we have every single afternoon. I'm pre-market prep tomorrow morning, 8:35 a.m. Y'all know him, Real Life Trading's Tony Pollock. We'll be doing a little ticker time with Tony and get a gauge of how Tony has been doing. Folks, thanks for tuning in today. Pre-market prep. We'll see you bright and early tomorrow, unless you're joining us over in Stock Trader Network, and we'll see you over there in a